Hi there, my name is PC Timmy, and you're welcome to another episode of Founders Connect. On this show, we interview African innovators and operators who are doing amazing things across the continent. On today's episode, we're having a conversation with Dennis Ondeng. He's the current CEO of Kopo Kopo. Kopo Kopo is a business that helps small and medium-scale businesses in Kenya with digital payment solutions and access to credit through integrated software. Dennis has been running this business for the last 14 years, starting as one of the co-founders when he was CTO, and has been here through different ups and downs, different milestones in the company, different pivot expansion plans that have worked and didn't work out up until the point where he's now CEO. So we're going to learn from him, his personal journey, his love for sport and how he influences what he does in his business, and also how Kopo Kopo has grown into a very profitable business that it is today. See you at the end of the episode. How would you describe yourself in 3 words?
3 words. Tech enthusiast.
Okay.
And a sportsman.
So tech enthusiast and a sportsman.
Those are 3 words, I hope.
Yeah.
Yes, okay.
Tell me about them. Tell me about both.
I think, okay, let me start with the sports side. Sports has been good to me. Actually, I was saying earlier, I played basketball on a scholarship in the US.
Oh.
So that's a different life. But then a lot of my makeup, a lot of my structure, how I structure my life, my discipline, I hope, if whatever amount it is, and how I think through problems have been greatly influenced with the process of sports, right? Whether it's playing, doing things that you have to do, but you don't necessarily want to do, keeping you out of trouble, keeping you on the straight line, solving problems on the fly. So basketball is kind of a game of ebb and flows. We call them runs. So you can have the first 5 minutes of a game can be so different from the last 5 minutes of a game. So you're constantly trying to solve problems, and you're put in different scenarios. You may be solving a problem when you have 1 foul. Sorry, those who have played basketball understand what I mean. But
I'm watching basketball industry recently.
The exact same problem changes, or how you tackle it changes when you're 5 fouls. You know what I mean? Or 4 fouls if you're 5 fouls if you're in the NBA, or 5 fouls if you're playing amateur basketball. So that and the competition. So I just gravitated, I'll watch Formula One, the strategy that you have to put in to win, the teamwork aspect of it. You have engineers, you have the pit stop. Like when I watch Formula One racing, part of my most exciting part is the pit stop. It's not even just the racing, right? It's a pit stop because it's an amalgamation of people who are working together to solve a problem. And the best team, sometimes some races, it's all the cars are the same, or they're separated by microseconds or milliseconds or half a second apart. And you find that it's some kind of teamwork from the engineering crew at the pit stop that makes the difference, right? So it's, in as much as it's an individual sport, it's also a team sport. So sport does that to me. So it informs how much you have to work. I think Ronaldo is one of my favorite players, not because he's talented, but because he's hard to work. If you ask me the Messi-Ronaldo debate, Messi can wake up and play basketball, soccer or football in his sleep. He was born with a talent. But someone like Ronaldo, I think you had to work, and you just have to keep working hard for something like that. So that's the sports part of it. For tech, I've been a tinkerer since I was a kid, so I think it was a no-brainer for me. I would take apart toys, machinery, hook them with batteries, transformers, or whatever magnetic stuff. I was just a tinkerer, and I knew early on what direction I wanted my life to take. So they have these things where sometimes in high school, for example, after your second year, you can drop a science or, for example, I knew I was never going to be a doctor. I don't want any of that stuff. So I dropped biology. So I knew very early on what I wanted to do. I actually wanted to be an aeronautical engineer. Didn't work out, but here I am as a computer scientist. So I can't complain. So from that aspect, I'm a tech enthusiast. I like technology, especially technology that pushes the frontier, whether it's now AI. I'm into astronomy, and I'm very interested in this push to Mars that Elon Musk, sorry, not to get, that's the part of Elon Musk I like, the just technology, space exploration, and things like that. I'm an enthusiast for that stuff, so I geek out to that stuff.
That's very interesting. Thank you. I feel like I know a lot about it. Like very different layers that you wouldn't be able to tell on face value. So that's very interesting. So you said you played basketball on scholarship in the US, but obviously right now you're in technology full time. So tell us a bit about how that switch went from full-time basketball to
basketball was what do they say? It was a means to an end. So I knew I wasn't going to make it to the NBA. Like,
did you want to?
Yeah, if I was able to. Those are two different things. Want to and able to are completely different too. I would have wanted to, but I wasn't able to. Like, it's ridiculous the amount. The percentage, the people you see in the NBA, it's like the creme de la creme. It's like a small sliver of the genetic lottery that I think it's not easy to see when you're watching a game or something like that. But I didn't win that lottery. I can tell you for a fact. So to me, basketball was a means to an end. How do I get my computer science education paid for? Fine, I'll play a sport. If you want me to play some game for 4 years, I'll play it. Just pay for my school and my health insurance and what have you. So I think after school, that was the end of it, of my basketball quote unquote career. So after that, I just do it recreationally, but I delved headlong into software engineering and computer science, because that's what I studied in undergrad.
Makes sense. Yeah. What would you say are the three most pivotal moments of your life and your career so far?
Career-wise? Ooh.
Maybe if there are two different ones, then you answer separately.
Yeah. I think pivotal, let me just, some of it I may end up showing how old I am. I think I wanted to, I was in a school called Mangu High School, and I went to Strathmore before they had a university. It was just some college, and we were using Windows 3.1 at that time. And I remember Windows 95 came out, and I think at that moment in my career, I determined to myself, if I'm never going to do aeronautics, because in my high school we had aviation as a subject or a class. So everyone who goes through Mangu probably at some point wants to become a pilot. So I think that was the time I knew that, okay, if I'm never flying planes, this is what this is what I'm going to do. Not even just want to do, because I knew that this is what I want to do. That's number one. Number two would be probably relocating to Kenya, making the jump
from the US,
because I spent around 15, 16 years in the US, and coming back was this wrenching decision, this process where I'm asking my brother back home, I want to do technology. What's there? What's happening? If I come back, what am I going to do? So it was this leap that you had to take, that technology will be driving the GDP of this country. There's going to be opportunities in future, in as much as maybe then there was none or there was none. So I remember I applied for the iHub. If you're familiar with the iHub, it was the year it launched is the year I came back, but I had applied for green membership. Like, we're not still in the US, and I got it admitted. So I knew when I came back, that's where to go. I think making the leap to come back to Kenya, and with the idea that for emerging markets like ours, our economy, like, there's a place for tech to drive the growth of this country, especially if the politicians behave. Let's put a caveat on that. So I think that was big for me. Was that two?
Yeah, that was two. So
that was two. One more pivotal. pivotal in my career. I think 2015, well, after I was with Kopo Kopo, we were struggling with a series, what you'd call a Series B raise. We hadn't flipped to profitability at that point. And it was a tough year for the company. And surviving that was just big. And I think it gave me a lot of perspective on not just developing solutions, because before that's all I used to focus on, but there's also people management, like people you work with, families, because we had to part with colleagues just to survive that period. And we turned the corner. So that's, to me, that's one of my, and that's why part of the reason I'm still here. People ask me, I've been Kopo Kopo for about 14 years.
Yeah,
like,
I was going to ask.
No, but 2015, I think 2015 was big. It just taught me resilience, new vision, other traits that I never tapped into, whether it was empathy, other things that you can just, from a life perspective, that you end up tapping into that zone to build a company. And I would say that was a pivotal point. It's not necessarily a rosy story or a feel-good story, because there's a lot of pain involved with that, but pivotal it was.
Makes sense.
Yeah.
On your LinkedIn, I see only 2 positions.
Yeah.
One is an IT manager, and then the rest is just Kopo Kopo.
I have a very short career, and that's
Is that actually just it?
Literally, because it's management. I was in the US. I was heading. It was a manager, and we were building software that linked. Then we had salespeople with Lenovo tablets, and we had to build some software that was going to hook up to Microsoft Dynamics, which was called Navision. Microsoft Navision. It was called Navision at that time. But when I came, like, if you asked, I would have thought that in 14 years I'd have changed jobs like 4 or 5 times.
Yeah.
Right? It didn't happen. And I still keep being asked. Because when I came back, I wanted to set up my own, do a startup, actually. This meant up being part of how I ended up in Kopo Kopo.
Yeah.
So I relocated, I registered a company. I've been filing 0 taxes for that, nil returns for that company for the last 14 years. So, because I knew I didn't want to get employed, but I wanted to build something. But then what happened is, on the first week of the iHub, I think the manager, Tosh, I don't know what Tosh is doing right now, but he just told me, hey, there's these 2 guys who want to start a company, but they're looking for senior tech. Would you like that? American.
So one of them was Ben?
Ben, one of them was Ben.
Okay.
Yes, the other one was Dylan. Yeah, he just said, there's these 2 American guys who are starting a company and they're struggling looking for senior tech. Would you want to talk to them? So I had lunch with Ben and Dylan probably 3 or 4 times. I think because I just come from the US, I didn't know what was going on in Kenya. I'm like an expert also. So he makes fun of me because I showed up in a tie. But yeah, I had lunch a couple of times with them. And I figured that this could be something. I'm a builder at my core. Like, I prefer building as opposed to, so I think I remember telling them, okay, you know what, I'll build, you guys can do the schmoozing and the raising and all that hard stuff. And I think it just worked because it played to my strength and their strengths also. And that's how I joined the founding team of the company. And I shelved my company that I've been filing nil returns for. Yeah.
Was there something in particular about, obviously you mentioned that you wanted to build, right? Like you wanted to found something. So obviously it's like, this is an opportunity.
Yeah.
But was there something in particular about either Ben and Dylan or the idea that made you say, yes, I actually want to do this with you guys?
It was more the idea, because I think in as much as I was Kenyan and I was living in the US, so you hear about M-Pesa, for example, and it's just, okay, it's mobile money, it's whatever. Right. So I remember when I came back and I was helping my dad. My dad was building a fence around a village home. It's like it's just a simple barbed wire fence, like manual laborers. And my dad has no smartphone or anything. He's a very old school feature phone. And I remember the first time I saw M-Pesa in action was him paying those guys, the workers back in the village, from his feature phone. And I just watched, because I'd heard of M-Pesa, obviously, but I've just come back from the US, and I watched him pay those guys, and I asked him, that's it? Because I'd not seen M-Pesa. So he said, yeah, I have to pay these guys. And there's beeps, there's USSD, it's kind of complex. But he paid them and that was it. And I was like, oh my God, this is something. This is like the US doesn't even have this. At that point, to me, that's what I was thinking, like using your phone for commerce. And so that's where, so when I met Ben and Dylan, just the idea that, hey, there's something to be done with mobile money here. And when Ben is also very visionary, like he would give you the history of, I think they had tried something in Sierra Leone at that time, but then Sierra Leone as a mobile money market was not as mature as Kenya. And that's why they moved to Kenya to run that experiment. So the idea, having seen just someone making a peer-to-peer M-Pesa payment, and I knew there was something there, then obviously Ben is really good in selling a vision.
True.
He'll never struggle on that from that aspect. So yeah, and after having lunch with them a couple of times, I was convinced. I was like, and we're like, oh, we'll never be able to pay what we afford. I was like, you know what, don't worry about me. Let's build something.
Yeah.
Right. Yeah.
So tell us about the journey of Kopo Kopo over the last 14 years now.
Yeah.
Yeah.
Yeah, we are way different from what we started as. I think at that time in 2011, actually, the idea was not even point of sale payments. It was like, let's help MFIs. So you have MFIs and you have their members, and they have to do savings deposits or loan repayments. And you have ladies or women traveling tens of kilometers to do these activities or what have you. So the idea was, hey, work with MFIs and help them, whether it's a savings deposit, if you're saving monthly, if there's some monthly payments you have to make, or whether you're disbursements or loan repayments, just the payments part of an MFI. So that's what we started with. In fact, when our first pitches for our seed round was that was what we were pitching. And that's what we started building with Kibet, who's the CTO now. He's also been there from the beginning, engineer, employee number one. So that's what we were building. So, but the idea, you had to work with Safaricom, you had to get a pay bill, then each pay bill had to be assigned to this microfinance institution. It was just heavy lifting. And even with Safaricom, to get a pay bill at that time would take anywhere from 2 weeks to 6 months. There's no rhyme or reason. So very quickly we realized that would not scale if you wanted to be a build company. And thank God we realized that very early on. So we quickly pivoted, and if you're going to build a company based on mobile money, where do you go? Okay. At that time, maybe 64, I can't remember what the exact number was, of all adults have M-Pesa in their phones, which is different from many markets. Many markets, mobile money is a cash in, cash out. So if you want to make a utility bill, you put money in and you make your payment. Or if someone sends you money, as soon as they send it to you, you withdraw it. I think by 2011 or 2012, Kenyans were already, M-Pesa was already acting like a bank. I know the equities and the KCBs are never happy because of this, because the regulation allowed it to become that. So it was behaving like a bank account. People are leaving money in there. They're walking around with digital money in their phones. But you go to Java, our biggest coffee chain, you still can't pay with that. So that is what we went to Safaricom with. And I think Safaricom was celebrating 18 years of M-Pesa. And if you looked at the journey, they mentioned it was called Nunua na M-Pesa. No one ever remembers that, apart from the OGs, right? So the idea was, the product was there. Nunua na M-Pesa existed, but it was, I think, Uchumi, a supermarket that is now closed, Bata, a shoe shop, and Naivas. Naivas is still, but it wasn't prevalent for point of sale. So I think we talked to Safaricom and said, hey, let us do this at the point of sale so that I can buy vegetables, I can buy coffee, I can do my supermarket. It could just be widespread. And Safaricom is okay. We signed that agreement, is what we live on. And we went to market with a 1.5%, just similar to the MDR in the card ecosystem. The idea is the merchant pays. Let the merchant pay. For the consumer, it needs to be free. And part of the pitch was at 1.5% as a merchant fee. For anyone taking cards, the pitch is very simple. Hey, you take cards. Guess what? All these people paying you with cards, where your bank or whoever is providing your PDQ machine or the POS machine is charging anywhere from 2.5, 3.7%. All these people who are paying are also walking with money in their phones, and you can get charged only 1.5%. So anyone accepting cards, the pitch was very simple. And I think we just started scaling from there.
And this was 2011, you said?
2011. Actually, 2012 is when, so early 2012, I think our first merchant to get the buy goods as it is, Lipa, the M-Pesa, the buy goods where it's just for the point of sale, was Pete's Coffee at the iHub. So
it's a high up again.
That was transaction number one. We've made hundreds of millions of transactions since then, but that was transaction number one. Yeah, so that was 2012. And from then we just started growing. We built tech, there was no APIs, and we got good in going over the top. So Safari, remember, there were no APIs yet, so we used to use screen scraping to get transactions that you'd have to credit the merchant account. So we used to tell the merchant, hey, the transaction will be in your account within 30 minutes, which is so different from now where everything needs to be instant. Everything needs to be instant, otherwise you're not going to hack it. So we built a company on top of just cobbling technology, and maybe that was one of the reasons we're successful, because it was hard. There was no APIs.
And nobody else was doing it.
No one else was doing it. You're just putting complex Lego pieces together to make a payment system, and that's what I think allowed us also to be successful.
Okay.
So started growing the company, 3,000 merchants. At some point, Safaricom also continued their process of acquiring merchants. So we became frenemies. We are like frenemies. So the ones we acquire, we work with them. We share the revenue in the back end. The ones they acquire, they don't share the revenue in the back end. But for us, our nimbleness allowed us. So we had a web platform for our merchants. We have mobile application for our merchants, USSD for those who can't. We literally even had an SMS app. I don't know, SMS, USSD. So we literally had an SMS app where you just send an SMS with balance and some PIN, and we would tell you what your balance is, or settle and some PIN, and from that exact phone, and would move money to a pre-configured settlement account. So I think then, so it was just, at that point, it was just growth. Let's grow the business, acquire merchants. 2014, I think we started thinking of Pan-African expansion. So we actually did it, but I think the idea that I was telling you earlier about readiness of markets. So we tried going to Rwanda. So we went live. We went live in Rwanda. We went live in Tanzania. At that time in Kenya, maybe we have over 15,000 to 20,000 businesses on Lipa and M-Pesa. So the idea was, can we replicate what we are doing in Kenya in Rwanda and Tanzania? Those markets, the telco, it's not a monopoly like Kenya. So like Rwanda, it's MTN and Tigo. So there's some distribution. Same with TZ, Airtel, and Vodafone M-Pesa. So they did same thing. Let's do the heavy lifting, integrate to the telcos, acquire merchants, and let merchants accept whether it's Tigo Pesa for Tigo, Rwanda, or MTN money. Same formula, and let merchants accept mobile money. Didn't work out because, for reasons I said, I think when it's a cash in, cash out mobile, and sometimes you get jaded, you think that, oh, you're in East Africa, so they should behave the same.
Yeah.
Not exactly.
Every market is different.
It's just so different. Like Tanzania is way different from Rwanda. Even mannerisms, the things that a Kenyan merchant cares about, or you'd find that Rwandan merchants care about some things that in Kenya they never bothered. Like in Rwanda, when a merchant, the take home, like your daily take, when you move it to your phone, what we would call settle.
Yeah.
After that, it's your money. You can make onward payments, right? In Kenya, when our merchants are making onward payments, they don't care that those payments are being charged because it's in your M-Pesa wallet that, yes, they were your business payments, you've moved them to your phone, and now you're making onward payments, and you don't mind for the telco to charge you. But in Rwanda, the merchants didn't want that. Like, you're charging me to use money I earned in my business. This should be zero rated. Like, why are Rwandese asking for this and Kenyans don't care about this? So just little nuances like that are really, really different. But the biggest was just in terms of if a market is not completely ready, the money you need to spend to prime it is a lot. And either the telco does it. So I think maybe that's where it didn't work as well as it did in Kenya. But everyone has always had reasons. I think Michael Joseph has talked about trying to launch M-Pesa in South Africa or mobile money. They're a card market. There's so much inertia that you have to try and move that you'd need a heavy investment.
Yeah. Do you think that's what contributed to the 2015?
Yes, I mean, we were not profitable yet. I'm not sure, like, if the question is, should we just have focused in Kenya? Maybe to have lengthened our runway at the very least at that point. It would have lengthened our runway, but that's neither here nor there, because eventually, it's not like we spent a ton of money. Maybe we should have spent a ton of money to make those markets successful. I think that we didn't. In fact, when we realized, okay, this is going to be our own boots on the ground, our own infrastructure on the ground, this is going to be really, really expensive. We did a mini pivot where we say, you know what, let's work with partners to do merchant payments, mobile merchant payments. And the low-hanging fruit is banks. Obviously, for banks, it's the idea that mobile money is eating their lunch, right? And because cards is not necessarily taking off, especially in our market. So they're interested in having mobile money so that those deposits can sit with them. So the idea is, so we did a round 2, a mini pivot, where now we launched in Ghana with our partners EcoBank. We launched in Uganda with our partners DTB Uganda, where we white labeled the tech, do all the technical integrations to all the mobile money operators, with the idea that the partner does the relationship management with the merchants. So in Ghana, that would have been EcoBank Ghana, and in Uganda, that would have been DTB Uganda. We had traction in Uganda, which just means Uganda, in terms of mobile money, behaves a bit similarly to Kenya. In Ghana, I think it was just a timing problem. It may be too early because it was still a very heavily cash in, cash out. And I think that's when, in 2015, now we had to restructure. We had to shrink. Obviously, the existing investors pumped in another, what you'd call a Series 1A or 1B, A1
like a
or
bridge
A.
round.
So the idea was, we had the pilot. We had this little pilot. In the process of doing all this, we're also doing a lot of experiments. And so I'm a big fan of experimenting and failing quickly. I think one time, who's this? Marissa Maya. I don't know what she's doing now, but at that time, she was, had she moved to Yahoo or not? She was still at Google, actually. And she came to the iHub and she talked, everyone was talking, ask her a question like, Google keeps launching things and shutting, and they fail down. And like, yeah, that's a good thing to do, where the idea is fail quicker. If you can find a way to experiment and fail very quickly, that's a good thing, right? So we're also fans of that at Kopo Kopo, running experiments and being very data-driven about it. So we had this lending pilot, unsecured lending pilot that we started in 2014. Actually, that Ben at that time, they were running it on Excel. Like, it would just be an Excel sheet. And how do you qualify merchants based on their transaction behavior, right? And it was showing some really, really good signs at that time that we were doing that raise. So I think the idea was, hey, let's focus on Kenya, prove this lending product before, refine what our offering would be before we do a Pan-African expansion. And I think that's what we did in 2015. And what I'm calling this lending pilot just blew up for the simple reason that a lot of SMEs, medium and small sized businesses, have struggled to get. The banks are not meeting the needs, their working capital needs, right? And this is for so many businesses. So it just became a natural, and that's what propelled us to profitability, and it's an engine that is driving our growth right now. Unsecured lending just as a product by itself, and it's fueled by the need. We have really cool stories about the need. Like in our office, there's a lady. She owns a hardware store in Gikomba, it's a market, and we call her Lucy. So she gave us permission to use her picture. So it's a persona.
Yeah.
So she's all over the office. It's just like this picture. And like every time we're having a meeting, hey, how is this meeting helping her? Is it helping her? No, cut it off. Right. And her story, working capital, she buys stuff from abroad, from China. And she's taken more than 20 working capital loans. And these are short-term loans.
Yeah.
And you're bridging the gap between when your customers are paying you versus when you need stock. And you'd be surprised at the number of businesses that struggle with that, and there's still not enough financial institutions to meet that need. So that's what Kopo Kopo has become. After 2015, now we are profitable. We make good money. We've grown.
There was a smile on your face when you said that.
I think now we are headcount is around 150. We have 2 offices and do a lot of advertising, and we're still growing. But there's still a lot more that we could do, especially from the merchant perspective. I keep looking. For me, it's always, can you do? They'll pay you if you build something that someone wants to pay for.
Yeah.
Like, what is it that businesses need that they're willing to pay for, and we can play in that space. So obviously payments in Kenya and increasingly in other markets. If you have, like, I don't work with cash. So if you can't accept digital payments, you're behind. And regardless, even if you're what we call a kibanda, the informal eating joints where it's just a dirt floor and food, you have to accept digital payments in Kenya. So that's a given. And I've just talked about working capital. So then there's, as you start going down vertically now, businesses' needs. And for Kopo Kopo, our aim is, okay, what business tools can we provide you that you actually need and you would be willing to pay off, so that we both
so
have
everything that the merchant needs.
Yeah. So yeah, we are trying to become a business operating system for the merchant. Forgive the phraseology. It's just, so right now we are trying to tinker with other things. Like, obviously we want to do cards. We are heavily mobile money. So right now we are working. There's no way you can say, oh, we help merchants accept digital payments and you're not doing cards, right? So we are behind the 8 ball on that, right? So that's, Ben is helping us work on that. So we want to do card payments, whether it's at the point, we'll start with at the point of sale, and whether it's online payments. And again, if one day people want, especially things that are already proven, debit card and credit card payments are proven. Bitcoin, I'm not sure, but I think we have this saying in the office. The day merchants start telling us, hey, people want to pay by Bitcoin, Kopo Kopo,
then you bid for them.
Guess what? We will add that, and you're going to log into the app. You're going to see your M-Pesa payments. You're going to see your card payments. You're going to see your Bitcoin payments incoming. So that's a given. Credit. So there's other tools that, whether it's outgoing payments, and can you make outgoing payments richer, right? We see merchants using our platform for payroll, but at that point, they're just uploading a CSV to make payments. But guess what? You can make those outgoing payments richer. You know what? By just layering a mini payroll product, especially for small companies on top of that. Guess what? Oh, now we have the tech to do your pay slips and what have you. So you can just see how those adjacencies start forming, or even invoicing.
Right Sounds now. Like you're ready to do like another 5-10 years, because the roadmap is very rich.
That's the answer. Well, let's 360, 18, back to the beginning. There's so many things we haven't done. And I keep telling, if anyone ever asks me, how come you still at Kopo Kopo 14 years or 15 years in? The answer is because there's so many things I want to do. If I don't do them Kopo Kopo, I'll go do them somewhere else. It's the same thing. But there's 50,000 merchants in here already. So just do it over here.
Instead of starting from scratch. Instead of
starting from scratch, because there's so many more things we can do for merchants to help them grow. And payments, credit is just scratching the surface. Others may not be that big as a whole, but
it's kind of value on.
It's just value. The more you add value to them, the more they stay with you. The more you literally need to have a merchant. There's 2 merchants, and one of them is with Kopo Kopo, and the next door person doesn't have Kopo Kopo. they need to be asking them, why the heck aren't you with Kopo Kopo? You're insane not to be with Kopo Kopo. Literally, that's the mentality. How do we get to that level where our merchants think that way of us? Right?
What was the switch like for you? Because you started as CTO of Kopo Kopo. Now you're CEO.
Yes.
What was that like, just building tech for so long in your life and carrying that schmoozing burden? Like,
now I have notebooks and pens. I have to walk around and make...
You have to talk to investors.
I think I know how to... When it comes to talking about my domain, I know... because I'm passionate about this, I can talk about it. But I think there's still a big change. I think, especially the people keep asking, what's the big difference? Because for all intents and purposes, Chad, who was the CEO, now is the CFO, we were running the company with him. So it's not necessarily my day-to-day changes. Obviously, from the tech side, I attend very few tech meetings, or once in a while, I'll see something in a scoping session and I say, I want to be involved with that because that sounds cool. But I think it's just the magnitude of decisions are a little bit different when you're CEO, because your neck is the one on the chopping block or on the line. So things may have been decided. Like I'm very attuned to all the decisions that are being made about the company. So if it's marketing, we are using this influencer, that's a good influencer to use, right? There's no negative. You know what I mean?
Yeah. Maybe every single thing matters, right?
Yes. Maybe at CTI may not. We are doing someone to do billboards, or we want to brand something, and I may not have zoned in as much as I want, but every single decision that can affect the company, I'm so attuned to it. So it kind of puts in a different mental space, or your mental energy is done differently. But again, I'm still a techie at heart, so there's some things I still need to learn.
And it shows when you talk about like the product roadmap a lot. Like some CEOs who can't talk about like the business vision, but you're very like, I know what we are going to build. So that kind of shows like
exactly. Like Chad, my CFO, he can look at a balance sheet for 3 seconds and tell you the quality of that company just by looking at the balance sheet for 3 seconds. So those are things that I'm getting better at, but those are, for example, things that are very new to me, like just drilling in on things that are big picture things and how they impact the company and what we want to make this year, what is our 3-year roadmap, and what kind of profits or growth are we projecting for 1 year from now and 3 years from now, and things like that.
That makes sense. I think you can answer this question a little bit, but I'll ask you anyway. If you, the last 14 years, obviously like the way tech was in Africa, in East Africa, in Kenya, is very different from the way it is right now. Running a business then versus now is very different. If you're going to just like sort of like talk through how the terrain has changed and how that has influenced the stages of the business growth, how would you answer the question?
I think sometimes it's being an OG or being someone who's been somewhere for so long is not necessarily, I think that at times it's not even necessarily a good thing.
Really?
Because there are sometimes, like sometimes my impression, like we work with a lot of Gen Zs and their perspectives are different, and it's very refreshing because sometimes you're stuck in some... I remember our first mobile app, when we were working on our first Android app, I think Safaricom had this deal, the Ideos. Is it Huawei who built Ideos? I don't remember. It was Huawei. The Ideos was this, maybe it's $80 or $100 at that time. It was a 10,000 shilling phone. And it's just a rudimentary mobile. But mobile phones, smartphones were not a big thing. And I remember when we were building the app, there was this thing, it has to work on an Ideos. We're not putting any feature on our mobile app that doesn't work on an Ideos. Now, if you come all the way to Samsung S22 or iPhone 15, 16, I mean, it's just a big change. And some of the things, like the first tech we built it's a wonder that it worked. Because remember, we were not even using APIs. Like building a company on top of screen scrapers is the scariest place to be. Like someone can change the font of something overnight on their website and everything goes down, right? So now Safaricom has, I think they own the tech, they brought Safaricom home. They have we still are on the G2 APIs, but on top of that, they do the large APIs. So watching the ecosystem grows and watching all the things that people have built on top of M-Pesa, whether it's some of those mini apps, or even Safaricom itself, all the things that you can do as adjacencies to M-Pesa. It's been amazing to watch, and the change, and not only for mobile money, even on the card front. Like right now, if you just walk to, during COVID, for example, I think if you walked into a Java and you saw all the machines at the counter, so they all had their card machines. Then there's they call them aggregators, Uber Eats and Glovo and everything. Like it's just like 10 devices, and it's all tech driving it. And no one wants to do grocery shopping now. There's some people who want their shopping brought to their place, or in the office, people are waiting for their lunch to come. In 2011, everyone left the office to walk, to go and eat, right? So, and all that, and that's what I was talking about, the opportunity of tech driving the growth, just the raw GDP growth of the country. And when I was talking about that's what informed me relocating. But watching that change, playing a part in it, and there's still more things to be done, whether it's now building, whether it's for consumers or even for merchants, right? I talked about invoicing, bookkeeping, or insurance products, savings products, embedded finance products that you can just keep layering on top of the tech that you're building. I think it has been good to watch, right? And be part of it. But always remember, change is the only constant thing.
Yeah, so you have to keep
So right now, I'm so old school, I keep thinking AI is just a buzzword. But so I tell my engineers, well, I'll be retired, farming in the village. You guys are the ones who are going to deal with. If you want Copilot to write your code, it's all up to you guys. I'm not coding anymore, right? So who knows what this is all going to become when it's all said and done with AI as a push. And what have you? Who knows? Maybe 10 years from now we have quantum chips. Right?
So many possibilities. What would you say has been the hardest lessons that you've learned, and the mistakes that you've made that if you had to do it all over again as a company, you would definitely avoid it?
I think one of the biggest lessons is control your destiny. Try and control. Obviously, you can say you're a control freak. The problem with payments, if it's card payments, there's the issuer, there's an acquirer, there's a gateway, there's so many players, you can't necessarily control all of them. You have to play in that space. And the mobile money is the same thing. But as much as possible, get to the point of whether you're working with a telco or a bank, or find ways in which you control as many pieces of this. Because especially if you're a startup and you're trying to build a business, because the Uganda I told you we launched him for reasons I can't talk about, or just for how slow things. We launched after more than a year. And if you're a startup with VC funding, that runway will run out. That runway will run out. So how do you mitigate that? What over-the-top plays do you have to work with, right? If there's the incumbents are slow-moving, as opposed to you as a fintech, you're just growth, change, move. So one of my biggest lessons is try and make sure you control as much as possible, right? Control as much as you can, in as much as there's some ecosystems. If I'm building a game that, whether it's Flappy Bird or that famous game or whatever, it's all me. I don't need to work with anyone. I can work 17 hours a night, launch my game in 6 months, put it on the App Store, on the Play Store, and see what happens. If it goes viral, it is viral. I'm full control. And there's gaming companies that are making millions, right? But then we are in a different ecosystem where it's payments, where you have to work with incumbents, you have to work with telcos, you have to work with banks, you have to work with regulators, and just managing that is really, really hard. And do all the things you can control if these things that you can control, do not outsource them. Right? Make sure you can you control most of it, and that's part of the lessons I learned, or we learned from the second version of our expansion to other markets where you're using partner. You can use a partner. And your project to them is one of 23 of projects. Maybe in 6 months, whoever was in charge of their KPI has changed.
Yeah.
Not they're even there, but their KPI has changed, and don't. For us, it's life and death.
Yeah.
Right? Is the company gonna survive or something like that? So, I'd say that's a big lesson. Then, the other thing is just build what people need. I think I saw something interesting on LinkedIn that resonated with me just the other day. I think it was I don't remember who it was. So if they ever watch this, they'll know it was them. They were talking about the idea that fintechs in Africa are just all about underbanked this, underbanked that, what have you. And it's true. It's not, people are underbanked not because they didn't have the app to bank them, right? They're underbanked because they don't have money, right? It's not, that's, another app won't solve that, right? So that really, really resonated, because that's how I thought of it. I always think of, are you building what, when I was talking earlier, are you building what someone will pay you for? Do they need something that you're building? So I just mentioned, a savings product. If I build a savings product, is it because the people I'm building for don't have a way to save, right? And I'm helping them? Or is it that they don't have money to save? That's why they're not saving, right? You have to make sure those two questions, answer those two questions, because otherwise you'll just build a savings product and there'll be no one to save, because guess what? They didn't have money to save. And because if they had money, there's already places you can save right now, whether you're going to buy a 90-day T-bill or whatever. So sometimes it's answer that question, where the value I'm supposedly building for, is it something that they actually need? Or is what I think they need masking another problem that I should be solving? So if the problem is they're underbanked, it's not that they have no avenues or to bank, it's that they don't have money. Okay, how do you get the money? How do you get people, like the merchant I was talking about, Lucy, where she opens an outlet because of some working capital loan you gave them. That's like giving them more money. So for some business people, give me more money to grow. Give me money to grow my business. It's the money I need, not an app. Right? It's the money I need, and no one is giving it to me. So to me, that's always, whenever we think of, even as we talk about the vertical tools that we want to start building and embedding within the merchant, that is always going to be in the forefront. One of the questions we're asking, like, is this something that merchants need? And do you even think they would pay for it? Right.
Makes sense. This is my final question. The rest of it, I'll keep it for Saturday. What's the one thing that you're most proud of? And then one thing that you're looking forward to?
Every month, we have a Friday where we are very transparent company. So we go through our finances with the whole company, or anyone who wants to be in the office tomorrow on Friday. And I'm just proud of the fact that we've built something that has traction, is growing. At the iHub, it was a round table this size with 4 people, Ben, Dylan, myself, and Kibet. It was a table of 4 people, never knew where it was going. 14, 15 years later, it's a company with 150 people, in a space where there's a lot of competition. So that's nothing to sneeze at. And we make good profit, so I'm proud of that. And just when I said I was a builder, just molding something from scratch gives tremendous satisfaction. 5 years, wow. 5 years, okay. We want to have taken over the world, the banking world. Like, not to become a bank, but I think if you think of a business, all what people call banking needs a business should have. Okay, let's put it this way. I want to be able to, especially for a company like Kopo Kopo, how about you sign up a merchant, and the merchant from within themselves just says, you know what, I don't even need a bank. Kopo Kopo this
They can
Kopo Kopo
do
is
everything I need to do.
yes. The day a merchant will say that, and I'm saying not just a micro merchant, like a good-sized, medium-sized business that is probably doing 20 million in maybe payments a month or 30 million, just a good-sized hardware store that just says, I don't need anyone else to run my business apart from Kopo Kopo. The day when merchants start saying that, then I'll know we have arrived. And I hope that is within the next 5 years.
So you're there for the next year. You're probably going to do year 19 and 20.
Yes. So I've never edited my resume for 14 years. I think whenever we are doing due deals for whether it's raising debt or because we on-land debt that we raise, that's the only time I'm reminded that I'm supposed to have a resume. So that's the only time I ever spruce it, because someone doing due diligence usually asks, who are you, what do you do, and what's your history? Yes.
Makes sense.
Yeah.
And this is definitely the final one, but a lot of the viewers who watch the show are early stage founders.
Yep.
So people who are actively bleeding already, so like pre-seed, seed stage founders.
Yep.
Or people who are like operators and tech talents who are like, oh, I either want to figure out like what kind of company I want to work for, or at some point I want to be an entrepreneur. Now, keeping in mind that target audience, what would you say to them? Say, hey, you've heard my story and heard about Kopo Kopo and how we started and how we kind of pivoted multiple times. But if there's one thing I want you to take away from listening to this, this is it. For an entrepreneur? Yeah. An early stage entrepreneur. An early stage entrepreneur. Work on your idea. And first of all, just know you don't have monopoly on ideas, right? Whatever you've thought of, a million other people have thought of it. Then how do you push raising? Like, is there a way you can postpone? I think there's a time a lot of fintechs work on this raising cycle, just raising rounds, because like we haven't raised that much. Okay, in 15 years, we've done what, $5.8 million in entirety? Yes, that's the only amount of equity or debt. That's just equity. Yes. That's very small for 14 years. It's small, yeah, and get profitable. So for entrepreneurs, how do you, if you get something that people will pay for, it'll delay your need to get money. To get. I'm not saying people don't, like, there at some point, obviously VC money tips the scale. Yeah. There's some growth trajectories that you've proved your product, you have market fit and all those things. You're actually making money, but there are some things there. A VC obviously can be game changer in terms of the trajectory and making this 100x company that people aim for. But how do you get to making money before taking money, right? Like, because if you make money before taking money, that means you're doing something that people are willing to pay for, as opposed to having an idea that you want to be funded and then take it to the mass market. So figure out a way, and sometimes it's not possible, obviously. It's easy to say, because we've been through those raisings. Like, I mean, there's a time I just used to, what's our runway? Then, right, let me know if we're in trouble. Right? So if you can figure out, for the entrepreneurs out there, if you can figure out a way to make money before you ask for money, you'll be better for it and you'll be better primed for success. And that means doing something or building something or providing something that someone else sees value and they're willing to pay for it. Fantastic. Yep. Thank you so much. You're welcome. And it's a wrap. Oh, cut. Hey guys, I hope you enjoyed watching this episode. It was very interesting to kind of just learn about what it takes to build a business that can survive a decade and more, and to learn around the different things that you need to consider when you are expanding to different countries, or how pivots happen and how small experiments can become, the big thing that makes your business actually survive. I think that was one of the most fascinating parts of Kopo Kopo, knowing that they didn't start from credit, but like running experiments on the side, and it becoming the key reason why they're still here today as a profitable business. I think as entrepreneurs, we need to know when to pivot, we need to know when to expand, we need to be able to make quality decisions at every point, but also most importantly, learn how to run experiments and fail quickly, because that's only when you know what to do, what's working and what's not working. Anyway, I hope you enjoyed the video as much as I do. Make sure you don't leave my channel without subscribing, and I will see you in the next video. Peace.